There's a difference between uncertainty and panic. Uncertainty can be managed through diversification and putting together a prudent portfolio. Panic, on the other hand, is always destructive. And what it causes investors to do is to put their head in the sand and be so paralyzed as to not be able to capture the rates of returns that are there for investors to achieve long term. So one of the greatest dangers to an investor is pure, unadulterated fear. And my underlying message to investors is this, that equities long-term are the greatest wealth creation tool known to mankind. And by studying history and watching how the markets recover, an investor can prudently diversify their portfolios. It only takes on average 111 days to recapture, historically since 1948, all of the rate of return that has lost in down markets and crashes. So when markets recover, they do so very fast and furious. And it's the investors that lost money, panicked, and never allocated back into the market prudently who are the long-term losers.
Portfolio analysis will also verify holding and owning the world markets while not hyperactively playing your portfolio like a Vegas gambler.
Gambling has nothing to do with investing, should have nothing to do with investing. I mean, I think the best example you can think of when you get the gambling analogy, and I happen to like this one, is it's the analogy of a casino. And you go into the casino and all these bettors basically would break even if it wasn't for the house, if it wasn't for the croupiers.
A croupier is a person who deals the cards, reels in the dice, spins the roulette wheel. The croupier represents the house, collecting the chips and the money. This is Steve Wynn. Mr. Wynn is a Las Vegas magnate. He says his house, it's called Wynn Las Vegas, takes on average 20% on each dollar bet. That's 20 cents on every dollar bet to the house, no matter if the bettor wins or loses. The house just needs you to bet. Mr. Wynn says his house is not concerned or involved with the outcome. If an investor allows its portfolio to be hyperactively traded, the House of Active Traders, the broker version of the croupier, collects steep transaction fees no matter if the trade wins or loses.